I'm 680 News senior business editor Mike Epple. Tim Hortons today opened its first restaurant in China. Shanghai, the location for Tim's expansion into China. A lot of Canadiana being represented within that restaurant as it looks to build on the Canadian brand and take advantage of, to some extent, the goodwill that other Canadian brands already in China, such as Roots and Canada Goose, have already experienced. Now, Tim Hortons is targeting about 1,000 to 1,500 locations in China over the next decade. It's got a lot of work, though, to do to catch up to the competition already firmly in place, including Starbucks, which has more than 3,000 locations already set up in the People's Republic. Quarterly earnings in today from two more big Canadian banks, the Scotiabank and the BMO, both citing challenging market conditions in the first quarter. Scotiabank announced a dividend increase to shareholders, even as its overall profitability fell somewhat in the first quarter to a still very respectable $2.25 billion. Stock was down in reaction on the TSX today. BMO today reported a first quarter profit that was up more than 30% to $1.5 billion, citing quite a bit of strength in its U.S. personal and banking operations. Elon Musk in trouble again with the U.S. regulators. He has to tell a U.S. judge by March 11th why he shouldn't be held in contempt of breaking a settlement with the U.S. Securities and Exchange Commission regarding another tweet regarding Tesla's business prospects. Or Musk sent out a tweet regarding the forecast for business and production levels at Tesla. It wasn't approved by the company, which was part of the rules that Musk agreed to in a previous settlement with the SEC regarding a tweet about taking Tesla private. Musk could face further sanction by the securities regulators, although he was criticizing the SEC today on Twitter, again, saying that all of this was previously disclosed in Tesla's quarterly earnings update. Home Depot today issued a warning about its sales growth. It says that things could be slowing a little bit in the United States with a moderating U.S. real estate market. In fact, they're projecting their slowest same-store sales growth in about 5 years, despite reporting a profit in the latest quarter north of $2 billion and still growth to about $26 billion in revenue, which was up substantially year over year. They're raising the dividend and buying back some stock, and yet Home Depot shares today were down 3% on Wall Street. And a massive management shakeup announced at Macy's. The iconic U.S. retail brand is getting rid of 100 vice presidents in a $100 million reorganization that they say will, over the course of time, make them more nimble and be able to respond quicker to changes in the retail marketplace. After seeing a disappointing Christmas sales period and seeing after reporting their earnings drop earlier in January, the biggest single-day stock price decline for Macy's, down 18% in January trade, bounced up a little bit in trading action on Wall Street today. From the 680 Newsroom, I'm Mike Epple for City News.